Hello and welcome to BQ Prime. I'm Hiral Dadia. One sector that is in focus is FMCG. With the companies that have reported Q4 numbers, it has been a pretty mixed bag. And overall, if you see Nestle, Tata Consumer, a strong set of numbers, HUL Dabur, somewhere there has been a miss in terms of estimation. But from here on, what is it going to be? Is it going to be a volume led growth or is it going to be a price led growth? What is the strategy going to be from here on with regards to rural markets with the gradual recovery that we are witnessing and with the new entrants that are coming in and the kind of mergers and acquisitions that are taking place in the sector? Is that actually going to lead to a price war from here on? That's going to be the key question that we are going to take with Naveen Trivedi, VP, Institutional Research at HDFC Securities, joining in. Naveen, good afternoon and welcome to the show.
Hello.
Naveen, my
Hi.
first question coming to you is
Yeah, good
overall.
afternoon, everyone.
Thank you. Naveen, my first question coming to you is firstly, what do you make of the Q4 numbers that have come in? Because you have majority of the companies that have already reported.
So, by and large, I would say trajectory is in line with what we were expecting from side. Uh, uh, we were expecting that the volume growth recovery will be gradual. However, the margin side recovery will be faster, and that's what we are building up in the quarter four, and that's what we're expecting in the first half of next year also.
Right. So overall, Naveen, from the commentary that has come in as well, how is the demand trend specifically from a rural India market looking like? And which are the segments which are seeing recovery and which are the segments that will lag according to you?
So, rural side, so far, I would say some green shoots are have been visible in the quarter four. However, the full-fledged recovery I would expect will be visible in the second half, considering there is a agri inflation supporting the income levels for the rural side, and there is a tepid inflation which we have been witnessing in the last couple of months. So, if these two elements sustains, then there will be some underlying recovery in the second half. Although in terms of the deceleration, I think we are bottoming out sort of situation. We have seen a high single digit sort of decline in the last 3 4 quarters. So from that base to further decline is not expected. We are building up a case that there will be gradual recovery in the volume side on a reported level, and the underlying recovery will be more visible in the second half.
Right. And overall, if you see from here on, we are looking at a volume-led growth or a price-led growth.
I think pricing actions. I think we have seen a lot of actions have already played out in the last 15 to 20 months sort of a time period. Further is not expected. We are building up a case that prices rather there will be some categories you may see more consumer offers supporting the volume trajectory, and thereby you may see there will be reversal in terms of price to volume in F24.
Okay. And clearly, with the kind of mergers and acquisitions that are happening in this space, what do you make of out of this? Is this going to be a phase where the biggies are going to start looking at acquiring smaller players? And I'm not talking about FMCG alone, but the entire consumption space is witnessing this kind of a phenomenon.
So in the last 2 years, we have seen small acquisitions to large acquisitions has happened in the consumer side. Even in the consumer durable side, we have seen acquisitions. In the FMCG side, we have seen acquisition. I think organic growth will remain. I would say for the large categories will be muted, and thereby to drive your growth, you have to enter into newer categories, newer additions you have to add, and thereby the inorganic is one way which companies have adopted to grow. Although, like historically, we have not seen too much success in the acquisition side, so we have to be very much watchful in terms of is there any real synergy in the acquisition or not. But the point here is that they all are building up a case where after 2 3 years time frame, these acquisitions will start supporting the overall growth rate for the companies.
Okay. And apart from that, Naveen, if you have to actually look at the companies from a valuation perspective, how are you placing FMCG valuation as compared to its 10-year average?
Sure, sure. So, our take in the last 2.5 years is that we are underweight on the sector,
Hmm.
and thereby, if you look at what we were saying, that earnings surprises side, we don't see too much areas are there where they can surprise either on the revenue side and or on the margin side, and thereby we were largely underweight on the sector in the last 2.5 years. This year, particularly when there seems to be earning cut sort of a situation is behind. We have seen both revenue cut and the margin cut in the last 12 to 15 months sort of a time frame. I think within consumer basket, FMCG is one basket where earnings will rather see in line or they will see more beat, and thereby we expect in this year particularly these names can see better traction on the stock side. On the valuation side, the recent correction in the valuation has already tapered down compared to, and they're coming back to sort of a last 4 year, 5 year average. Compared to last 10 year average, I think most stocks are still at a premium to their historical averages.
Right. So, is this a good time to buy FMCG names? Because clearly, from an earnings perspective, if you go to see Nestle, Tata Consumer, strong numbers, HUL, Dabur, again, a mixed expectation. Smaller players, say the likes of a Bajaj Consumer or a Jyoti Laboratories, they've actually shown promising growth as well. So, if you have to take all these names into consideration, where would your bets be?
I would say, this year, as I mentioned, that should be a better year for FMCG names, and thereby stocks where so there are two stories which are playing out. One
Hmm.
story is around commodity-led earning push, and second story is around rural recovery. By and large, if you look at commodity sort of stocks, where they are more sensitive, they have already covered up in the last 3 to 4 months sort of a rally. Rural side stories still hasn't factored in the stocks, and thereby, if you look at Marico's or Dabur categories, where rural pie is also meaningful, these are the names which we still believe that the full pickup hasn't factored in the stock.
Okay. And overall, conversations with managements, etc., what is that indicating specifically from a distribution perspective, region perspective? Where is the growth coming from according to companies?
Distribution side, last 5 10 years we have seen companies have expanded distribution in the rural side,
Hmm.
particularly. We don't see too much lever only driven by the distribution expansion. If you look at incremental expansion, will not really adding up in the similar fashion which they were adding up in terms of the revenue side. And this lever, these companies will keep expanding it. However, the way to look at this sector is that in the existing setup, how much they are being able to patch in terms of the revenue, or they can drive in terms of the category side. These are the important monitorables for the growth part.
Right. And apart from that, how are you looking at competition? Because the key question that everyone is talking about on the street right now is the big B, which is Reliance, which is getting into the FMCG space in a big way. I mean, it's not only soft drinks to soaps to everything, right? And the clear strategy that we've seen with Reliance, even in the telecom space, is disrupt the market through lower pricing, right? And that's what they're doing in the FMCG space as well. How are you looking at a Reliance from an FMCG perspective, number one? And number two, do you think this is going to be a major price war to gain market share from an HUL, ITC, PNG, or even for that matter, a Patanjali?
See, if you look at last 10 years, 15 years sort of a time frame, what we have seen in FMCG is only consolidation. Top five, six players have only gained market share in
Hmm.
each of the consumer basket. What we have been talking about for the sector is that incrementally we may see more fragmentation. So last 2.5 years, if you look at D2C was one area where we were talking about and highlighting that most of the bigger categories, bigger names will more see fragmentation sort of a thing. and market share will not be a lever going ahead for the top players. Reliance is one another example where it is still supporting that sort of a thesis where fragmentation will be a part of the sector, especially categories where the growth rates are less than one time of GDP. And thereby, when the category growths are not very attractive, and if you find that more muscular power companies come and they try to disrupt, these are the time when you have to be watchful. What are the rights for the right to win for the new entrant, and is the price is a tool to disrupt? Is a distribution is a tool to disrupt? So in the D2C case, we haven't seen price as a tool to disrupt. We have seen pricing wise, D2C companies were much ahead compared to the mainstream companies, and thereby the pricing was not a disruptive level. It was a product positioning and the value addition which they were giving it to the consumers. That was the one reason they had seen more success. In the case of new competition, we need to see uh, what are the right to win, because we have seen Patanjali also at times had seen massive success in terms of in terms of the growth rate and the new users. After that, the addition was very difficult for them also. So by and large, the crux of the point here is that we in larger categories and even the futuristic categories, we may see more and more users will come and they will disrupt the mainstream companies. And thereby, if you look at most companies, even in the mainstream side, they keep adding up more legs for the growth, and thereby what we were talking about the inorganic side sort of a thing, there that approach is also there.
Right. So I think this is going to be an interesting space to watch out as well from here on over the next 18 to 24 months as to what's the kind of disruption that is being created for the biggies, who wins the race, and which are the small ones which are able to play a catch up rally as well. But Naveen, any top picks that you would want to recommend from this space? I know we spoke about majority of the counters, but if you have to, if someone has to look at FMCG as an investment at this current juncture, which are those 2 to 3 stocks that you would recommend?
So we have been earlier had a buy rating on ITC, but after this run up now, we see a large part of the rally has already been captured. In the FMCG side, commodity-led rally has already been played out. I think the rural-led rally is still is due, and thereby we believe Marico and Priceless will lead this rally.
Right. So these are topics that Naveen is recommending as well. Thank you so much for joining us on the show and decoding the sector for us today, with all the information as to what's needed to look at it from an all-round perspective. Thank you. Stay safe and speak to you soon again.